Last month, I logged into my credit card account to pay my bill. A pop up appeared before I could do anything else. Update your annual income to help us serve you better. There was a friendly little form with my old income pre filled and a box inviting me to enter my current number. Serve me better. That's what they said. I closed the pop up without updating anything because I know exactly why they're asking, and it has absolutely nothing to do with serving me better. Here's what most people don't realize: when you tell a bank your income, you're handing them ammunition. You're giving them data they will use to make decisions about your financial life, decisions that benefit them, not you. Banks have convinced us that sharing income information is routine, expected, maybe even required. They slip income questions into applications like they're asking for your phone number. They send friendly update requests disguised as customer service. But most people never stop to ask the basic question: why do they actually want this number? And what happens when they get it? The answers might fundamentally change how you interact with financial institutions from this point forward. Hit subscribe to Naomi Capital right now. New breakdown every single week. The first thing nobody tells you: banks are not required to ask for your income in most situations. There's no law mandating that credit card companies know your salary. There's no regulation requiring your bank to have updated income information on file. They ask because they want to know. They ask because knowing helps them make more money from you. This distinction matters enormously. When something is legally required, you have to provide it. When something is requested, you have choices. Banks deliberately blur this line because informed customers make decisions that hurt bank profits. Think about the last time you applied for a credit card. The application asked for your annual income. You entered it without thinking. Why wouldn't you? It seems like standard information. But here's what happened the moment you submitted that number: the bank's algorithm instantly categorized you. Your income became a data point in a profile that determines not just whether you get approved, but what interest rate you'll pay, what credit limit you'll receive, what offers you'll see, and how aggressively they'll market additional products to you. The credit limit trap: higher credit limits aren't always in your interest. A $30,000 credit limit doesn't just mean you can spend more, it means you probably will spend more. Banks know that people with higher limits tend to carry higher balances. They're not giving you a high limit as a reward for your success. They're giving you more rope because customers with more rope tend to hang themselves with interest payments. Banks use your stated income to determine how much credit to extend. Higher income means higher limits, and higher limits mean more opportunity for debt accumulation, more total interest paid over time. That credit limit increase isn't a gift, it's a calculated business decision. Ability to pay pricing. Here's where it gets truly disturbing. You might assume that higher income leads to lower interest rates. Higher earners are lower risk borrowers, right? The reality is more complicated. Banks use income data not just to assess your risk, but to assess your price sensitivity. Someone earning $200,000 might be less likely to shop around for a better rate. Someone with substantial income might not notice or care about a few percentage points difference. The algorithm knows this. It adjusts accordingly. Studies have shown that affluent customers sometimes receive worse terms than they should because banks correctly predict they won't bother negotiating or switching providers. Your high income becomes a signal that you can be charged more without losing your business. This practice has a name in banking circles: ability to pay pricing. The more you can afford, the more they charge, not because you're higher risk, because they can get away with it. Hit like if nobody ever told you this before. The marketing machine. The moment you reveal your income, you get categorized for targeted offers. High earners receive aggressive pitches for premium cards with high annual fees. constant offers for personal loans, investment products, and insurance packages. Every login becomes an obstacle course of upsells, carefully calibrated to your income bracket. Banks know that someone earning $180,000 is more likely to say yes to a $550 annual fee card than someone earning $60,000. Your income data isn't just sitting in a database, it's actively working to separate you from your money. Your data has a very long memory. Here's something even more concerning: income data persists. When you tell a credit card company your income, that information doesn't disappear after your application is approved. It sits in your file. It gets used for decisions you'll never know about. It gets shared with affiliates and partners in ways that privacy policies technically permit, but most customers would never expect. That income figure you entered 5 years ago might still be influencing how you're treated today. Banks have long memories. Your data has a very long half life. When do you actually have to disclose? Mortgage applications? Yes, income verification is federally mandated. You provide pay stubs, tax returns, employment verification. No way around it, and you wouldn't want to. The 2008 financial crisis happened because of no verification mortgages. Auto loans typically require income disclosure, though standards vary by lender. Credit card applications, here's what most people don't know. Credit card companies generally do not verify the income you report. They can't access your tax returns without permission. They can't see your pay stubs. They're relying entirely on what you tell them. Banks want income data badly enough to ask for it, but not badly enough to verify it. Think about what that tells you about how they're using it. Those periodic income update requests, entirely optional. You are under no obligation to provide updated information. The bank wants it, they don't need it. The real life example: let me tell you about a friend of mine. She was a contractor with variable income, sometimes $8,000 a month, sometimes $15,000, depending on projects. When she applied for a credit card, she reported her income conservatively using her lowest earning months as the baseline. 2 years later, the bank asked her to update her income to process a credit limit increase. She entered her current earnings, substantially higher than her original application. Within 3 months, her phone was buzzing with constant loan offers. Her credit card offers shifted entirely to high fee premium cards. Her mailbox filled with balance transfer promotions designed to encourage debt accumulation. She had been reclassified. Her peaceful banking relationship became an aggressive sales campaign. She never updated her income again after that. When the pop ups appeared, she closed them immediately. Within about 6 months, her banking experience returned to normal. The algorithm stopped receiving fresh data. Her profile gradually decayed toward default treatment. This illustrates something important. Banks are optimized for fresh information. Stale data is less valuable because it's less predictive. Every time you provide fresh data, you reset the clock. You become a newly classified target. The algorithms wake up and start working on you again. What you should actually do: I am not suggesting you lie. Providing false information on a credit application is fraud, it's illegal. Don't do it. What I am suggesting is that you think strategically about when and whether to volunteer information that will be used against you. There's a significant difference between lying and declining to update. For new credit card applications, provide income, but be thoughtful. If you have variable income, you don't need to report your best month. Report accurately, but don't volunteer more than necessary. For income update requests on existing accounts, close them without responding unless you specifically want something that requires verification. There is no penalty for ignoring these requests. They will disappear and return. You can ignore them indefinitely. For credit limit increases, decide whether you actually want the increase. If you do, provide the income. If you're happy with your current limit, decline without giving data you don't need to give. For bank calls asking to update your information, remember that phone calls are designed to create pressure and immediacy. You can simply decline. The call will end. Your accounts will remain open. Your behavior is stronger than your stated income. Here's the final insight: when banks have less income data, they're forced to rely on your actual behavior, payment history, utilization rates, account longevity. If you pay on time consistently, maintain low utilization, and keep accounts open for years, those signals speak louder than any number you might enter in a form. Your actions become your profile rather than your claimed income. Behavioral data is harder to game than stated income, and unlike stated income, they can't get it just by asking nicely. The last thing, the broader principle here extends beyond banking. Every institution that asks for your data is collecting it for their benefit, not yours. They may frame it as serving you better, improving your experience, ensuring accuracy. These framings obscure the actual purpose, enabling more precise extraction of value from your relationship. Provide what's required, decline what's optional. The next time that income update pop up appears, you'll know exactly what's happening. The bank wants fresh ammunition for algorithms that will optimize their profit, not your experience. Close the pop up. Keep your information to yourself. Let your payment history and responsible behavior speak for themselves. That's the data that actually matters. And unlike your stated income, they can't get it just by asking nicely. Hit subscribe to Naomi Capital and turn on notifications. Drop a comment. Did you know income updates were optional? I read every single one. See you in the next video.